Today we explore how gold and Bitcoin represent the perfect sound money combination. Yes, I understand that Bitcoin isn't for everyone and lacks gold's pedigree, but its potential and its growing mainstream acceptance make it a compelling asset to understand. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy. So please do consider subscribing. So Bitcoin was the world's first cryptocurrency and works on a decentralized blockchain ledger. This ledger is held and maintained across a global network of computer databases, which authorizes and authenticates all transactions. There are currently over 18 million Bitcoins, and the maximum number mined will total 21 million. Working upon a decentralized ledger, it allows for peer-to-peer transactions, offering the ability to transact internationally between two wallets without any need for a bank. These wallets can be held on crypto exchanges like this, or alternatively and more securely held offline on a hardware wallet like this. So the first point to note is that Bitcoin's monetary policy is the hardest of any asset. To quote early stage investors, the Winklevoss twins state that it is a mathematical framework that is free of politics and human error. This is reflected in the increasing rate of Bitcoin's stock to flow. The stock to flow ratio has long been regarded as a key means of determining an asset's potential as a store of value. Gold has one of the highest stock to flow ratios, which peaked at 72.5 in 2008. Thereafter, it has leveled off in recent years to around 59.9 in 2019. Some of the most comprehensive modeling that has been undertaken on Bitcoin's stock to flow and its market value is by Plan B, as when Bitcoin mining goes through halvings, the new flow of Bitcoin being mined falls every 4 years. These are depicted by the clusters with the stock to flow denoted on the horizontal and the corresponding market value of Bitcoin on the y-axis. Bitcoin's mining process was intended to simulate that of gold and become harder and more capital intensive over time, requiring more and more expertise. Next, Plan B goes on to consider how the language regarding Bitcoin has changed over time, coinciding with these halvings. The proof of concept coinciding with a $1 million market value, a payment facility coinciding with a valuation just below $100 million, being discussed as digital gold, and a market valuation of nearly $10 billion, and as a financial asset with a market valuation currently at above $200 billion. Comparing this to gold and silver market size and stock to flow offers a fascinating comparison, as we can see here. And as Bitcoin undergoes further halvings, where the new flow of Bitcoin is halved in 2024 and again in 2028, Plan B's stock to flow model highlights a potential $100 trillion outcome. But of course, there's a long way to go before then, and wouldn't the central banks and regulators take a huge interest once then? And so in addition to its strict monetary policy, there have been three other factors that have really interested me in Bitcoin's rise, and that has included the fact that it seems to correlate better to the expansion of central bank balance sheets better than any other asset. Yes, previously we have looked at how the biggest driver of the gold price now appears to be the expansion of the Fed's balance sheet. Yet gold's performance over the period 2005 to present has lagged that of the debasement of the US dollar. Meanwhile, Bitcoin's growth since around 2012 has amounted to over 10,000%. But of course, correlation does not equal causation. Yet this very week, after the ECB meeting and the announcement that the ECB will gobble up more debt than governments can actually sell, gold and silver edged downwards, while Bitcoin enjoyed a 5% gain thereafter. Gold Money's Alistair McLeod then tweeted, "Bitcoin is up while gold and silver are down. Could it be that the Bitcoin generation has a better grasp of fiat debasement than mainstream fund managers?" With so much focus upon the Fed, there may be an element of truth to this. And so a small allocation to Bitcoin has been shown to enhance portfolios over extended periods of time. Second, Bitcoin appears to be nearing some degree of mainstream acceptance, with PayPal now announcing that customers will be able to buy and sell Bitcoin online. It is this wider acceptance which generates the same sort of network effects as those we saw with the internet back in the late 1990s. And so this August 2020 graphic highlights how common cryptocurrency actually is. In essence, this tells us that it is still the minority, and a tiny minority at that, in developed nations who actually hold cryptocurrency. And so Jeff Booth, author of the excellent book The Price of Tomorrow, tweeted, "1. Don't underestimate the power of a network effect. Internet users in 1995 equals 16 million. Internet users in 2020, 5 billion. For those that don't remember the internet in 1995, the use cases were narrow. Most people didn't see what was coming. 2. Paul Krugman in 1998 using traditional models to understand the new paradigm. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. 3. Bitcoin users in 2020, around about 40 million, growing at a similar rate as the internet in the early years. How many people are making the same mistake today, forecasting the network value of Bitcoin by its narrow use case today? Indeed, something else that has fascinated me has been the recent currency crises in Argentina and Lebanon, which has forced many to adapt to new payment methods. And this offers what I consider to be a telling indication amidst the likely economic hardship to come. Indeed, you can argue that we're at the beginning of the S-curve, and with the prospect of the younger generation becoming increasingly interested in Bitcoin and other cryptocurrencies, there's every chance a market size of less than $250 billion could expand dramatically. My third big reason is the way in which Bitcoin is being used as a reserve asset by large corporations such as Square.com and MicroStrategy. What's more is that many smaller countries are also taking a keen interest in Bitcoin as a reserve asset. Of course, Bitcoin's slow transaction speed is insufficient to be regarded as a very convenient means of exchange. However, as a reserve currency or a reserve asset, a wealth preservation tool similar to that of gold, it would seem to have a great deal of potential. But of course, it has its downsides, including the extent of the electricity consumption used in mining, that exchanges could be banned, or that it lacks gold's pedigrees across the millennia. Yet the flip side of these arguments is fascinating. Its market size remains tiny at less than $250 billion in comparison to gold's $11 trillion. And all it takes is one or two rogue states to actually accept cryptocurrencies and enable the prosperity that those cryptocurrencies and the libertarians that would descend upon those countries would seem to facilitate. However, I do love the way that Bitcoin does account for some of gold's weaknesses. For instance, that the supply is perfectly finite, it has zero storage costs, and is cheaply and easily transported. And while it remains a speculative asset, it has an amazing risk-reward profile. Yet for all of this potential, Bitcoin is ultimately numbers on a screen, and I completely understand how some would be unwilling to trust a network and would rather hold physical gold and silver. And for that very reason, I myself would not want to be parted with my gold or silver, that's for sure. But the great thing about Bitcoin's rise is that it acts as another nail in the coffin of the fiat currency era. Yes, they will seek to preserve their powers, but the cat is truly out of the bag, and we are witnessing an era of renewed enlightenment, a renaissance in sound money. For that, we should all wish gold, silver, Bitcoin, and other appropriately designed cryptocurrencies enormous future success. So I hope this has been a useful Gold Bug's take on Bitcoin. Thanks so much for watching. Do consider subscribing, and I look forward to seeing you next time. Bye bye.